Good morning, legends. Hopefully you guys can hear me and see me okay. How's everyone doing? Let me just check my settings here. I am on Wi-Fi, so I hope that it does look like we're good for the moment. Hopefully it stays green and doesn't cut us out. But anyway, welcome. How's everyone's week been? How's the trading going? Welcome to the start of a new trading week, which I consider to be Tuesday. Not a big fan of Fake Move Monday. But here we are. In this video today, I'm going to talk about some pretty key levels for Bitcoin, what's going on with some liquidation data and some price targets based off that, where I think we are in the cycle, and also what we should be aware of heading into the next couple of weeks. So if you're new here, welcome. If you're returning, welcome back. Be sure to hit that like button and hit subscribe if you learned something new in this video. Let me know if you guys can hear me okay. I think you guys can. Everyone's saying hello. That is looking good. I think that means that I can continue. All right, so there's a lot of talk online about $25,000 being the next target. We're going to have a look. I tricked you, I was expecting. Now your video, 4:30 Melbourne. I actually had problems today. Sorry, I don't even know if I'm late or early, to be honest with you, but my whole OBS system just disappeared from my laptop and here we are. But anyway, we're going to get into some of the price targets. So let's have a chat about this 25K target first. I want to go to the daily time frame and just show you what is going on here, which is our main concern trading this particular model right now. So we can see where price is right now at 23,130, that there is still a very small remaining part of this unrecovered vector candle here for price to get through if we're to have continuation to the upside. The other caution about that is that there's a fairly major liquidation level at 23,400. Now, that doesn't mean automatically short there or that we're not going to get past it. If the momentum comes in, it could very easily break right through it, collect it all, and go for the next one, because there is a higher one above that is sitting at 24,950. Now, these two numbers that I've just quoted to you are very, very high levels of liquidation. I hope you guys can hear me okay, by the way, because I am just on my normal laptop mic, so apologies if let me know if I need to talk louder. Anyway, I'm also not feeling the best. I think I'm about to come down with something. But anyway, these are two very, very significant levels. So just to explain why they're more of a concern to me than normal is when we have a look at this liquidation data, for example, as you may know, if you watch this channel regularly, or if you're brand new here, I'll very briefly explain it. These blue lines above price are where shorts will be liquidated if price were to return there. This is people who are leverage trading. And the pinky orangey below price is where longs will be liquidated if price were to return there. Now, this is only in relation to the visible range when you look at this one, meaning only back to positions that were open from January 20. So, there could be people who open positions before that, they're not showing up here on this particular chart. Now, this particular chart, where I pay attention is when I'm short-term day trading, right? Because I don't need more than 4 days worth of data for day trading reasons. But when we start to zoom out and look macro, then we do need to see where major levels of liquidity are, and we need a lot more than 4 days worth of data. So that's when we turn to this chart here. And this chart here is very, very significant because, to briefly give you an outline, you can see just here it shows on the left-hand side. Yeah, you guys can see that. On the left-hand side, it's showing you as it gets brighter into the greens and yellows, that's more and more liquidity at that particular price point, right? So when you're looking here and you see a yellow one, and you look left, you can see how over time that has gotten brighter and brighter at that level. That means that that is where more and more people are opening up positions, and that's where their liquidation levels are. So we actually want to see that turn to the yellow colors. Now, when we talked about 15,600 being the target on this channel, that was because it had turned an extremely bright yellow color, and it was up in the very high range, and it was zoomed out on a very high time frame. Whoops, why is this doing this? Sorry, guys. It was zoomed out on a very high time frame, and it was just an abnormal. I'm so sorry about my phone. Be sure to turn off your phone so that you could pay full attention. Anastasia. Anyway, what was I saying? Yeah, so that was an abnormally high level of liquidity. And at the time, a lot of people were talking about Bitcoin going to 10 to 12K, and some people were even calling lower than that. And if you follow me on TikTok, you'll know that I did a video saying I don't see it going there. It's just not a possibility right now. Does that mean it can't go in the future? Absolutely not. But at that point in time, it wasn't a possibility because the liquidity wasn't available below that 15,600 level. And as you know now, because time has passed, that is the level that we went to. So when we have a look at this, we want to look at something very, very significant like that. And we want to see one particular level really growing to an extreme number. So when we have a look at these two levels here, I'm so sorry. When we have a look at these two levels here, the reason they have my attention is because they're in this yellow zone here above price and this other yellow zone above here. Now, so now that you get that, we then also have to look to the downside. Should we just say brings for prosperity? So we now need to have a look below price for the exact same theory. If price were to reject at any point, what is going to be the price target that is our major level of liquidity that makes sense for the market makers to come for? Now we kind of have this bluey green area here at 22,000, but it's only green. So to me, that may be an area, if price were to reverse, that may be an area of like a pause, where we go into a board meeting, where they collect more contracts, they take some time to take out those people. But the major level is down here at 20,500, say 20,005 to 20,006. So you have to keep both of those targets in mind. Now, when you do that, so let me actually put, mind you, I will tell you that there is still another level at 15,200 if we're talking super macro. And there's also, I don't have it on here, but there is still another one at 13.6. So just pointing that out for now, because at the end of the day, a new trend, if you were to say that, if you were to ask yourself, is the bear market over or not? A trend is not confirmed without a retest, and we still don't have it. So you have to keep that in mind, and you have to be open to this still potentially being a bear market rally until we get that retest that creates a higher low. So that's why you need to keep an eye on liquidity levels that are currently below price, and we're looking for significant ones. Now, I didn't mark that one. What did I say it was? 20,500. So let's put that one in. Sorry, 1 second. All right, so these are our major levels here, which would be very interesting if that is all Bitcoin retraced to, because it would mean they're not even interested in coming back for these, and that would almost be exact repeat of the last bear market bottom where you had this, it looks like a U, but it was a W as well. This is a W here, but also in the last bear market it was a very ugly looking W. I've shown you that on previous videos on this channel, and it never actually came back to that level. It created that major FOMO. And then it just took off from that point, and it never came back for the big retest. So a lot of people who are talking about, who potentially missed this move are now looking for pullbacks to get back in. Just be prepared that, if history repeats, which we know it doesn't ever fully exactly repeat, we may not get it. And we didn't actually, in that last bear market, we didn't actually get the retest until the COVID dump, which you can't count because that was a unexpected one-off event. So and it just moved. It was a V-shaped recovery. It moved away almost immediately. So you wouldn't really call that a retest. That's that's just an unusual event. So point being, you've got your two key levels above and below price. Now that we know our above and below price targets, we can now have a look at candlesticks and think to ourselves, okay, well, what's going on here? And there's one thing that concerns me here is that this here is a daily time frame W formation. Let me draw it out. Sorry guys, sometimes I get lazy. This here is a W formation on the 1 hour time frame, broke the 50, went for the 200, consolidated in a board meeting. It's a very typical rise level 1 play here. That sometimes retraces back to the 50, sometimes goes into a board meeting. In this case, went into a board meeting. What I don't like, however, is that after the board meeting, we would expect rise level 2, which is what we're in now, and we don't have any strong volume. Look here, we have declining volume down here. Now, could that be normal in level 2? Yes, it can be, because level 2 generally is where the market maker will spark the move. So if we were to have a look on a lower time frame, you'll probably see some inducement, some fast moving candles out of a consolidation period that would encourage people to go long. And that's what they do at that level. So it could be, that could be the explanation for why we don't have any vectors on the daily at level 2, because the market maker only starts the move at level 2, then they sit back and watch retail react. So this right here would literally be them watching retail react, and retail don't bring the same volume. So therefore we're not going to see those vectors. And so all of that makes sense. However, if that were to turn out to happen, then that would mean that according to this model, there should be one more rise to go before any sort of pullback. Now, the other thing too about this model is that we try to line it up with news events, because news events often lead to reversals. And a couple of weeks ago, we talked about on this channel, when this move was starting and a lot of people were freaking out, we kind of thought, okay, look, there is a chance that this is a fake rally into a very big news event that is coming next week? Yeah, next week. And that is not even a news event, a news week, I should say. And that is all of this stuff. So, but what I want you to be prepared for now that we're heading into literally the week before it, there could be high level gains here, because it's all about the market maker building as much liquidity as they can before this. Now, when I say be prepared for gains, don't assume that we're going to continue to run just because we started running. Don't assume we're going to continue to run all the way until this week. It is very possible that the market maker will issue a sharp reversal this week, and then we get rise level 3 out of it. The problem with this is that market makers know ahead of time what's going to be released, because they get their orders from the people who know this stuff. We can't, right? So we have to rely on trading what we see, whereas they have targets and they're literally moving price to reach their targets by the end of the week. So just be very, very careful about just assuming that we're going to continue running into the 1st of Feb. If you start to see signs of a reversal, be prepared for that to be the pullback between potentially level 2 with level 3 potentially happening after the news event. So that's one thing. What else do I want to say about that? So this is very, very high time frame stuff. Now, if we do pull back, I'd be expecting us to pull back into any of these liquidation levels. 20,005 would be the low end, 21.5 probably the mid end. I don't know why I have this area of interest. We'll take that off. But kind of around there, if we don't come back into these candles, that's going to be even better. Provided we do get this pullback. If we don't come back into these candles, that's even better. That's going to be your second chance entry if you missed out on this run so far, providing it holds. But as time goes by, we'll talk about that on this channel. But I wouldn't, if it does get there, I know a lot of people talk about a retest of 18, 19K. Don't be that person who misses out. Like if this is the start of a new trend, again, we will talk about that on this channel when we get the right confirmations. But if this does turn out to be the start of a new trend, and price does pull back to around this 20K level, don't be the person that was waiting for price to go down to 12 and didn't buy at 15. Do you know what I mean? Like it's a $3,000 difference and now you missed out because your ego told you that we were 100% going down to 10 to 12K. So yeah, just be aware of that. Know that the liquidity is here. It's also a retest of the 200 EMA, by the way, and probably by that time that it happens, the 50 will catch up too. So yeah, if the EMAs are around here at the time, if we do get a pullback, I wouldn't just sit on my hands and do nothing and hope it goes even lower. If it doesn't even attempt to recover, especially these 3 green candles here on the daily, then this is probably your last chance entry, to be honest with you, providing this actually is the start of a new uptrend. Now, let's have a look at the, which by the way, let's talk about that. Is this the end of the bear market, or is this, just a rally in a, rally in a bear market? I don't think you can actually make that call. Number one, until after FOMC, that's one thing. Number 2 is until after the first quarter earnings are out. I think those two are 2 major events still to come. And if we can get through the first quarter, like maybe say even into April, then I think it, and we don't revisit the lows, then I think it's safer to say the bottom is in. It's why I'm not really making the call right now. I think that there's, still things to pass. But one thing I do want to say is that news events like FOMC and whatnot, for the most part, especially lately, they don't tend to trigger a long-term change in trend. And that's one thing I want you to watch out for, is especially lately, people are getting more and more used to the FOMC news and they're getting less and less triggered by it. And often it can just be an immediate reaction, which at the end of the day, that's just a stop hunt to take out people who are guessing too late. And then we just continue as normal. So again, we have to wait for the actual news to come out so that we can judge that at the time. But the fact that we've had such a run, like from 15,000 to 23 or 15.5 to 23, for this to be a full-blown reversal, the FOMC news would have to take back all of that, then drop lower. Like that seems a little bit extreme for just some FOMC numbers. To me, it does. So I'm definitely looking for the FOMC, whether it's pre-dump, post-dump, I don't know. I'm looking for that to be a pullback to give a last chance entry over it being a full-blown reversal and heading below 15K. But of course, I'll trade what I see, and if new information becomes available around the FOMC and, things change and they start to look really dark, then we'll talk about that then. But that's how I'm feeling for now. So at this point in time, when we look at the 4-hour time frame, if we're talking reversals, I still see this here as a rise 1 on the 4-hour, the entire thing. Now that we've got more structure, board meeting, and a rise 2. So even on the 4-hour, I feel like there should be another rise to come. Again, look how long this one took here. This board meeting here took 6 days, which is annoying. And this one here so far has been 3 days. So we could just board meeting right until the FOMC, which would be very annoying, but it's possible that we do absolutely nothing right until the FOMC, get a stop hunt, take out this liquidity on the news, and then just continue like normal. Like that is totally possible at this point in time, which will make this week very boring, but I hope you do get some action. But the only reason I don't particularly see when we talk higher timeframes, I don't particularly see reversals happening where price is right now, is I don't have a stopping volume candle that creates my first side of the M. So not looking for a reversal on the 4 hour. Those are my conditions to enter a trade. So therefore, let's drop down to lower timeframes and see if we can find one. And here on the 1 hour, we've got, we look for the last peak, we look for the last peak formation, which we have to zoom out now because it's a really long time ago. We've got 3 hits to the high here, which would have created your 3 levels there. Then the last peak formation was here. You can clearly see a W out of there. We've got a rise here, very big board meeting, little bit of a stop hunt in that board meeting. But essentially we've just gone sideways ever since Saturday, which makes sense because weekend. So again, it doesn't look to me to be the right place to look for an M formation reversal on the 1 hour time frame. Can I see a stopping volume candle? No, not really. Can I see any high volume at this area? Only in this one here, but then price went higher than it, which means it released everyone trapped here. Doesn't count. So basically everything here doesn't count on the 1 hour time frame if you were looking for short. Now let's have a look here. The thing that about the 15-minute time frame that I want to point out is that it is very possible right now that we are literally repeating the behavior of the last board meeting, which, I will show you that. I will show you exactly what I'm talking about here. So if I were to draw this line across here and then this one here, you can see here that what we potentially have going on right now is an ascending triangle. Hopefully you can see that well enough, right? Now, when we go back to, where was the last board meeting? Hang on, which one was it? It was this one here. Here we had, hold on. Sorry, guys. I'm doing this on my laptop, so it's really, it's hard to grab everything. Oh, sorry, here. So we had the same situation around here. Sorry. Yeah, I believe people were drawing ascending triangles like this, something like this. And we hit this level a few times. We were talking about a potential stop hunt out of this level here. And there was fair enough to be a lot of confusion about whether this ascending triangle was going to break to the upside or the downside. Now, that's before this fake move here. That was end of UK session news event fake move. So was it? I'm pretty sure. No, sorry, that's the weekend. Wait, hang on. That's the weekend. That's not even the one. Sorry, guys. I'm talking about... Let me find the right one. It was Friday. Anyway, I can't remember where it was, but we had the exact same situation of an ascending triangle. A lot of people were talking about a breakout to the upside, and then a lot of people were saying it's hitting resistance a lot, gonna reverse from here. And both of the arguments were very, very fair. However, what ended up happening was we got a stop hunt to the high on a news event, and then the US opened and issued a pretty nasty reversal. So what I'm saying is we're looking very similar to that, and I don't know why I erased that line, but we're looking very similar to that now with a potential same situation of an ascending triangle. So it would be doing exactly the same thing. So just be careful of that. But at the end of the day, if you trade this method, then you know that the only time we look for reversals is with a stopping volume candle, and that leads to an M or W formation in the right spot. And then the next test is the break of the 50. And we don't have any breaks of the 50 here currently today. This here, to be honest with you, this could have been an M formation that led to a board meeting, that led to a drop, that led to a board meeting, that led to a drop, and that move could be over. So keep that in mind. And this whilst that was playing out, this here could be the W formation. That is going to lead to the breakout to 25-ish K, by the way. It's just consolidating here until, I guess, a market with more volume opens up, because Asia ain't it. So here's what I would be doing today. What are we in now? Asia's got an hour to go. What time zone am I on? US, 2 o'clock. Okay, so we haven't had our Asia extension yet. That's what I would be waiting for. If the Asia extension breaks the initial high of the day, which is up here at about 23,170-ish, if the Asia extension breaks that, look for some point in UK, for potentially UK, maybe US, but one of those sessions to retest that level and create another higher low. Now, it could be a retest of the 50 EMA, it could just be a higher low. If you get that, meaning it has to look like this, we break the initial high of the day, we come back, get a higher low, wherever it is, higher than this, I would expect that we're going to go for the 23.4 next, because that is a whole vector candle there on the 1 hour time frame. So at a minimum, I would expect we're going to go there. Then depending on how much momentum they bring in and how crazy it gets, it's possible that we do reach the 25K target if we can get right through this area of liquidity first. Now, if they, the other thing you have to watch for, which you'll only be able to know at the time, is if that extension to the upside is usually around 2 a.m. New York time. It will be in the Asia session. If that extension to the upside turns out to be a stop hunt or look like a fake move, meaning it looks like this candle right here, or potentially something like this, which I don't think it would be that volatile, but a candle like this is a stop hunt that breaks the high, so it breaks above 23,164-ish, then be open to that creating your M formation. So it really, both of them, the upside potential and the downside potential, depend on price breaking the IHOD, but it depends on what the candle looks like when that happens. If you get a strong bullish engulfing like this, it's very possible we're going to have continuation to the upside. But if you get a stop hunt that looks like this, then you're going to look for M formations and start looking for reversals to the downside. I would 100% be open to both right now, and I wouldn't be bullish or bearish, to be honest with you, because you know what, at the end of the day, like, we're in a board meeting, so you can't be bullish or bearish. Now let's have a look at ETH whilst we're here. So ETH looks like it's trying to hold close to the initial high of the day at this point. It's a very tight range. So the longer it holds to that initial high of the day, the more time it gives the 50 EMA to catch up to it as well, and which is again another positive sign. And again, looks like, hold on, what am I doing? We're hitting this level multiple times here, and then we are still creating higher lows. So again, this does look like a move that, if you trade retail patterns, you'd be looking for this to be a potential ascending triangle. Depending on how you trade them, the right way to trade them is to wait for it to break, retest, and then you would take short positions, or to break, retest, and then you would take long positions. However, sometimes you don't get the retest, which is annoying. So for us trading this method, however, we're above the 50 EMA, we should be bullish until we get a reason to go below it, which we don't have just yet. And also we can count the 3 levels with the M formation. That's level 1, that's level 2, that's level 3. This is a final damage, potentially a final damage W here. Oh, whoops, sorry, wrong thing. Here, this is potentially a final damage W. Guys, if I'm not speaking the same language as you right now, I highly recommend you come and learn this method, because it's good. That's what I have to say. But yes, a final, I make up a lot of words that aren't actual like technical analysis, so you can't really Google them. But a final damage W is when the second peak is lower than the first peak, and it causes the final damage. hence the inventing of the word. But yeah, at the end of the day, like, you could ask me, do we have 3 hits to the high at the same level? Yep, we do, which is a reversal sign. However, still lacking stopping volume candles other than this manipulation that happened in US last night. I still can't really see, other than this up here, I don't see anything after that of who is actually trapped. And now, could you say that the longs here are still trapped? Potentially, they may have been stopped out down here because that's a pretty big difference. The 50x and the 100x, 100% would have been stopped out. The 25x may be okay so far. Were more of them trapped here and more of them trapped here? Probably too. So then does that make sense that we would head down and to liquidate whatever's left? Yeah, it does, possibly. But the question is, does a market maker, like, what emotions does a market maker want to play on right now? Because everyone seems to be very, very bullish. A lot of people are saying, you know, Bitcoin to 25K. They can definitely trap more people if they continue price up than reversing just yet. And also the lack of news events this week. Like, we do have some. So just to be aware, we do have some this week. Let me point them out. But you know, when we look ahead, the bigger week does look to be next week. This week we have advanced GDP on Thursday and we have core PCE on Friday. So those are definitely two news events to look out for. Again, they're potential news events that are just going to cause a short, sharp 15-minute move, and you know, then things just continue as normal, unless there is a very high level of leverage in the books, which we don't really have right now. If we look here, it's just showing 6 billion in this current visible range. So they could definitely continue price up to induce more. Now, I'm currently in a long position. You guys know on this channel, I opened up a long position at 15,700 and I'm still holding on to that long position until I have a reason to close it, which at this point I do not. So that's it. Those are my conditions today. I want to see for Ethereum, I want to see it get above 1640 for continuation to the upside. A break below the 50 EMA and retest that fails to get back above it would be my idea that we're probably going to head down into FOMC. Is there anything else I wanted to cover today? I don't think so. If you are looking for an exchange to trade on, OKX is my preferred exchange. Be sure to check out their website. They have just released their latest audit as well. So you can have a look over that. And if that feels safe to you and you're looking for somewhere to trade, there is a link in the description of this video to get 15% discount off your trading fees. And finally, also the link to join us is in the description of this video as well. Let me just quickly scroll through these questions to see if I missed, oh my Lord, there's a lot, but I'll do my best to get through your questions before we jump off. What have we got here? I'm not answering questions about Brinks. Can you please do a spot trading OKX tutorial? Certainly can do. When I return back home to Melbourne, I would do that. I'm over 35. Can you post your TikTok videos on Facebook? I do, lately I do. You straight called the bottom. I don't like to say that. You can say that about me, but I don't like to say that about myself. At this point, it's accurate. But we still have to get through March, April. Oh, some of these comments, I'm not going to read them out, but you guys are funny. You make me laugh. Do you think they will at least trap traders before? Because at the moment, no one is trapped. Yeah, I think I answered that in the thing. I don't really. Yeah, the only people that would be trapped are up here currently. But they may have already been taken out down here. The other thing too to be very aware of, guys, is that, oh my gosh, I have hardly any battery left on this laptop, so I need to go soon. But the other thing to notice is that when price shot up initially on Bitcoin to 20,000, I think it was 20,500. So the first rise that no one expected, there was $40 billion worth of open long positions in the market at risk of liquidation at that level, right? And then it kind of just disappeared. So 20,000, was it? No, it was 21,500. No, it wasn't. I can't remember what level it was. It must have been, no, it was this candle here up to this point. So 23, up to here, it got to 44 billion. And then after this, it was all gone. So, I don't know. What do we make of that? I don't 100% know. But what I can tell you is that they they definitely made bank on that move up. And it wouldn't take much. It goes to show how many people thought that they were missing the bottom when they were being tricked down here. So the 40 billion point I'm trying to make adds to what I was saying earlier about FOMC, that even if it is bad news and we have a dump after, it doesn't necessarily mean we're going below 15K or we're even going back to the lows, because the liquidity is not really there for that to happen, because it already got wiped out here. So we have to wait and see what gets what new leverage gets built up. But yeah, like for such a small move to take so much away, and I think this took away a bit on the weekend as well, it definitely tells me like it is leaning me more towards the bottom is in than not. But I really do want to wait till we get to April, after all the earnings reports and the first quarter stuff and everything. Like I just want to wait to that before we can get too carried away with it. I think that's the smart way to play it. Don't be bullish or bearish right now. At the end of the day, what you want is a really big dump, basically, that creates a higher low. Like that's what's going to give you confidence. Now what else is there? I think that's it, guys. All right. 100K Bitcoin, the true king 11. Thank you for the super chat. That's very nice of you. I wouldn't mind 100K Bitcoin after all we've been through. By the way, on that note, if this does turn out to be that the bottom is in and we don't revisit 15.5K again, look, we made it, guys. Like that's the positive side. We made it through the bear market. And if you're still here, like it's only like going to get better from here. So again, don't want to call it just yet. Let's get through these next, month or two of potential tough events. But if we can get through what we've been through and then get through that, I think we're going to be fine to, it kind of feels like this bear market flew, even though it was, I think, the longest or second longest bear market we've had in Bitcoin ever. I kind of feel like we went through it okay together, Ben says, I hope so. It's been brutal. It has been brutal, but we're still here. That's the positive part. Okay, so that is, I'm going to leave it there. I think I've answered most of those questions. Have an amazing day. I will be back tomorrow with a new update. But at the end of the day, it's the same rule. We either break the 50 EMA, retest it, and then we're looking for shorts, or we've got 1, 2, 3 hits to the high. We're waiting to see if we create a higher low again, and then we would expect upside. But watch out for 23.4. Don't expect an upside is going to go right to 25. 23.4 is a very high level of liquidity, and it's very possible we stop hunt there and then reverse. But usually something like that will happen on a news event. So, all right, guys, have an amazing day. Don't forget to smash that like button. If you haven't already, hit subscribe. Grab the links from the description of this video, and I will